In this week's episode of the Stockscores Market Minutes, I'm going to look at that often used trading cliche, trade with the trend. It's not that simple. I'll show you why. Then we will look at the overall markets, the stock markets, the crypto markets, the commodity markets. I'm going to look at the day trade of the week on OPTT, and we will run a market scan for swing trades. It's all coming up. So the trend is your friend, trade with the trend. These are all things that we as traders have heard. But what does it really mean? Well, it's important to put the trend of the overall market on your side. If the market is going up, then stocks in general will go up. Now we can beat the market by trading what we call alpha stocks, those that are trading abnormally. But it is definitely easier to trade with the trend. The thing is, which trend? If I'm trading large cap stocks, then I'm going to look at the S&P 500. If I'm a more speculative trader, someone who is trading smaller cap, more speculative stocks like biotech stocks or that sort of thing, I'm going to focus on the IWM, the Russell 2000, because it is a better representation of what retail traders are doing. Now you can also look at it in terms of individual sectors. Obviously oil stocks will move with the energy sector index. You can do that with gold stocks, with biotech. So make sure that when you are focused on a certain sector or a class of stocks, a market capitalization of stocks, you focus on the right trend. Now we're going to look at some charts here just to demonstrate what I'm talking about. This is a chart that I use for day trading. It is the Russell 2000 15-day, 15-minute chart. And if the trend is up, then I'm going to be favoring the long side on day trades. If the trend is down, I'm going to favor the short side. But that's not all. I also want to see if the market is moving up from the open or down from the open. For example, last week on Wednesday and Thursday, the market was moving up from the open, and therefore it was a better day to be on the long side. On Tuesday, the market opened strong, but it moved down from the open, which made it better to be on the short side or to be really focused on those alpha stocks. Now we can also look at something like the longer term chart here. This is the 1-year daily chart. If you are a position trader, someone holding for weeks or months, then this is the relevant time frame. So it's not only enough to have the right chart, but also the relevant time frame. If I'm a position trader, I'm going to look at something like the daily chart going back a year. And you can see here that we had an upward trend from, say, November, October until mid-February, and the market was great for trading. Since that time, we've been going sideways, so I've been a lot more cautious, a lot more selective with my longer-term trades. We can day trade because there's uptrends and downtrends on that shorter-term time frame chart, but if we are a longer-term trader, well, right now we're stuck in a sideways range. So then you have to go looking into individual sectors. Well, there's good action in the oil sector. We'll be looking at that chart in a moment. So even though maybe the broader market isn't all that great, you can go to the oil sector, which has been really doing well for a number of months, and there's good opportunity there. So go where the trend is up. If you're day trading, also consider whether the market is above or below the open for the day. All right, let's get into this week's market analysis, starting off with the U.S. markets. And here is the S&P 500 30-day, 30-minute chart. And so this is a good representation of what large cap stocks are doing. And you can see they've had a great move the last few weeks, and they're actually starting to go parabolic here, which means that they're getting a little bit risky. They're getting up toward the top of this price channel. When we look at the weekly chart, you can see that the trend has been up for many months, and that's great. But as long as we are trending higher, we can be on the long side, but it's getting a little late to take new positions. It's getting harder to find fresh stocks making moves because the market has been going up for so long on the large caps. Now we'll see with the NASDAQ 100, it's recently just broken out of this trading range from a rising bottom. That's called an ascending triangle. We broke out a couple weeks ago, and they have been moving higher. and stocks like Microsoft have done very well because this is the relevant index for that stock. Now we can also take a look at the small caps, and we looked at this already, but you can see it's actually building a really good pattern. This is called an ascending triangle. And if we can break out of this, break out through that 235 level on the IWM, that would be a good indication that this market is going to make another leg up, and we'll get that great trading market for retail traders like we had from October until mid-February. Until then, you got to be pretty picky with those small cap retail trading stocks. All right, let's take a look at the Canadian markets now. There is the TSX 60. Daily uptrend has been in place for some time, helped in large part by the energy sector, which has been doing well, and of course that helps Canadian banks as well. And really, it's a market to hold, getting a little extended on the buy side, so you got to be quite picky about what you take. TSX Venture is your micro-cap stocks in Canada. That's sort of your representation of retail trading in Canada. Those speculative names have been pretty quiet because this market index has been headed sideways for the last few months. On to currencies. US dollar broke the downward trend a couple of weeks ago and is just sort of fighting to build upward momentum. Hasn't really done it yet, sort of dealing with that resistance level there. But I do think the US dollar is more likely to go higher than lower, and that has some ramifications for some of the commodities. We'll talk about that in just a moment. Now on the crypto side, been a bit of a bear on Bitcoin for a little while because it broke its parabolic upward trend here and then its linear upward trend there. Next level of support way down here. That's between $10,000 and $15,000 roughly on Bitcoin. And until it can break the downward trend line, I'm going to be fairly pessimistic on it. It looks more likely to go lower than higher. Interestingly though, Ethereum has already fallen to its support. It didn't go up as much. I mean, it had a good little run there, went parabolic, broke the parabolic trend there, but now it's come back to this old trading range, and that's where it bounced in the last couple of weeks. Does it look likely to go higher? Not really, but it does look like it's making a little bit of a base, at least in the short term. So perhaps the downside isn't as much on Ethereum as it is on Bitcoin. Moving along, we'll take a look at the commodities, and there is the chart of gold that had that breakdown on inflation concerns a few weeks ago. Looks like it should move back to test that support. Hasn't got there yet, but really kind of a dead market, I would say best avoided on the gold stocks right now. Now, one area that's been quite strong, that sector that has done well, and the sector telling us that those stocks in the sector are worth considering, and that is the energy sector. Last year, it was a sector that nobody wanted to touch, and now it's arguably the hottest sector in the market. Why? Because it has been trending higher for a number of months. It is coming into some long-term resistance soon, so I think the upside is a bit limited. I'm not comfortable initiating new positions, at least for longer-term trades. There's often opportunities for short-term trades in the energy sector where we're holding for a few days because the momentum is up. But those longer-term trades, they kind of left the station already. The bus has left the station already on many of those. And I feel like we're getting closer to resistance. You want to be a little cautious about initiating, coming into that sector now as it is a bit late. Looking at the fear chart, you can see that fear is low, not a big deal there. So bullish on both time frames for US and Canadian stocks, neutral long-term on gold, bearish short-term, and bullish on both time frames for oil. Now we're at the end of the quarter, and that really reduces the amount of news flow and the amount of trading action. So we're having a quiet market the last couple of weeks. It'll probably continue until the end of next week, and then that earnings announcement flow is going to start to drive some abnormal action again. The long-term trend is pulling those large cap stocks up, but there's a lot less trading action in the small cap stocks because that important IWM, the Russell 2000 sector, has been trending sideways. Watch it for a breakout. It's building a really good pattern, and that could telegraph a summer rally, perhaps mid-July is my guess. Gold is quiet while oil continues its upward trend, and fear is low. All right, let's do the day trade of the week. This is an example of the kind of stocks that we look at during the Active Live daily trading webinar. where you can watch my analysis screen as it is running an algorithm on the entire US stock market, looking in real time for stocks that are trading abnormally. And we then apply some chart analysis techniques to those stocks and try to pick our entries from that. OPTT was a stock that started right from the get-go on the open on Friday with some abnormal action. I didn't love the setup right at the start of the day. However, it did have a good move out of the chute. And then it proceeded to pull back in around 10:30. It made a break of a pullback. I actually prefer that break better because it's recharging buyer interest. You're getting a break of the pullback, which often then leads to the next leg of the upward trend. So a couple of entries. The initial one at 9:32, pretty good. I'd give it a 6 out of 10. And then the pullback play entry at a little after 10:30 was about a 7, 6.5 out of 10. And that both ended up working well. Now the economics of the first one were such that required 2,490 shares for the position, $6,574 of capital. It was below $3, so it's hard to margin that, so no margin there. It earned, if we use the upward trend line break as a sell signal, which is what we typically do, it earned about 8 times risk. So that's an $800 profit for $6,574 of capital, a 12% return on a one-day hold, on a relatively quiet trading day before the long weekend. All right, so how do we find stocks to take those swing trade positions? You know, the overall market on the daily chart has been going sideways, so not that much excitement, but there have been some swings in that, and therefore you can take trades where there's 3, 4, 5 day anticipated hold period. Well, what I like to do for that is run something called the Stockscores simple swing strategy in the Stockscores market scan. So let's jump over to that now. And the first thing I want to do is set my default chart to a 10-day, 13-minute chart. So I go down to the chart options, and I'm going to select intraday charts, and we're going to make this 10 days, and then we're going to create the chart, and then I just have to go back and make it a 13-minute chart. Now you're probably asking, why 13-minute? Why not 15-minute? I like the fact that there are 30 13-minute candles in a day. It's just a nice round number, and so that's something I prefer to do. All right, once we've done that, you can then look for stocks that are moving early in the day. So about 45 minutes after the open, maybe an hour after the open, run the Stockscores simple swing strategy. Now, it's a little late now because the market's closed. However, I just want to take you through the process. So we then inspect these charts looking for those that are breaking from low volatility on this shorter term 10-day chart. So for example, this stock, LIACF, broke out from the sideways trading on the 28th of June. It then went up into a nice upward trend. So that's what we're looking for now. So as we cycle through these charts, we're looking for those breaks from sideways trading. Now here's one that happened today, earlier today. I can draw some lines on here and you'll hopefully see the pattern. So this is, I'm not going to let me draw my lines like I want, but anyway, there you see the breakout from what's called a pennant pattern. You can see the stock breaking higher from this low volatility that's occurred over the last few days, coming alive with abnormal activity. That sets up the swing trade. And you can see an entry at around 175, closes the day at 192, and looks like it has decent potential to continue higher. So again, what we're looking for is that break from sideways trading. Some of these did this, a number of days ago. I don't particularly like stocks doing it with a large price gap. So we want to find the stocks that surprise us with abnormal activity, breaking from that sideways trading pattern. As an example here, BLRX back here, see, sideways, boring. You run the scan, you're going to find it there. You're going to find it here, and now it's already made a nice move. So that's a good little process to use if you are a swing trader. When the market is maybe not showing much of a trend on the daily chart, it might be showing a decent trend on the 13-minute chart for the relevant market, in this case the IWM, to represent those retail speculative stocks. Hope you've enjoyed this week's Market Minutes. Please click on the like button, leave a comment, subscribe to the channel, and most importantly, trade well.